after our session highs for shares of Alphabet up 4.4%. We'll keep you posted on all those moves in the conference call. Meantime, breaking news on Uber. The ride-hailing giant is discussing plans to lay off about 20% of its employees. Let's bring in Amir Efrati. He just broke the story on the information. Amir, great to have you with us. Already on April 16th, they withdrew guidance, so we know that they were foreseeing the impact of COVID. But tell us what sorts of employees and what other sorts of cost-cutting measures may be in the offing.
Well, employees of all ride-hailing companies, whether at Uber or Lyft or anywhere else around the world, have seen their businesses take a nosedive by as much as 80% compared to last year. So I think there's an expectation broadly that layoffs were upcoming. It's unfortunate because ride-hailing at Uber was actually turning a net profit in the last 2 quarters of last year. A lot of people don't even realize that. But nevertheless, it's all gone now, and they don't know when the recovery is going to happen. So a 20% reduction in headcount is one of the things they are very seriously discussing right now. Some groups may be hit harder than others within that company, but it's a pretty huge company, 27,000 employees.
Uber withdrew guidance, as I mentioned, mid-April. Then Lyft followed by withdrawing their guidance, I think, about a week later. Are we to sort of extrapolate, Amir, and think probably this will happen also at Lyft?
Yes. Lyft is much smaller in terms of its business. So its fixed costs, including employees, are a much bigger percentage than even at Uber. And at least at Uber, they have something to cling to, right? They have a hot food delivery unit, Uber Eats, that is actually growing just as fast as it was in the fourth quarter of last year right now. So they at least have something to hold on to and put their effort into.
All right. Amir, thank you. Amir Efrati of The Information with his report tonight. Tim Seymour, I go to you on this. We're looking for a return to normal in all sorts of industries, and this is another industry. So where would you expect that turn to happen?
Well, I think that turn happens, there's some similar dynamics here, obviously, with the airlines. If you think about whether you're more comfortable in a kind of localized environment getting into a ride share versus getting into an airplane when you have to go someplace or you really want to go someplace. But the easier decision is to maybe, locally figure out something else. And so I think, look, the fact that they're cutting costs and doing what they can to get through a difficult time, we'd already started to talk about balance sheet issues with this company in particular. So I think this is a case where you have very little reason to get back in, especially for a company that, yes, was showing profitability trends, but still the complexity of this business makes it a harder business in this environment. And if you had the relative value, would you rather? Lyft is an easier call here, but neither are businesses that we really understand the headwinds just yet. I don't see why you have to invest in this name.
Self, would you rather? And then you pulled out, I go for option C. Love that. Recalcitrant.